grateful you could stay with us. I am Pius Kojo Baka. Straight to our very first story. Government has made what it describes as a significant progress with domestic debt exchange program to encouraging banks to fully participate in the program. This is because the Association of Banks has agreed to sign the deal subject to the proposed terms. There is more in the following reports.
The proposals that have been put on the table that will result in the commercial banks participating in this deal includes government agreeing to offer 5% as coupon payment for 2023. Government has also agreed that it will offer 9% coupon payment on the 12 new bonds that will be issued by the Finance Ministry. Another significant move that has been proposed by the state will eventually result in the commercial banks participating in the deal is that government has agreed to remove all clauses in the exchange memorandum that empowers the Republic to vary the terms in the exchange program in the future. The Ghana Association of Bankers was, however, quick to add that the agreement that it will reach with government is, however, subject to the approval of individual bank shareholders and their board of directors. Or for some, since the commercial banks were the main reason for the extension of the domestic debt exchange program, government can be said to have made some significant progress in getting a very important stakeholder in participating in this domestic debt exchange program.
All right, so let's stay a while longer on this developing story. Joining us via Zoom is a senior lecturer at the Department of Finance at the University of Cape Coast, Siriam Kawo, for his perspective on this joint statement issued by the Ministry of Finance and the Ghana Bankers Association. Grateful, Mr. Siriam Kawo, you could join us on the marketplace. Now, first off, we saw this happen yesterday by way of the release issued by the Ministry of Finance plus the Ghana Bankers Association. Your initial thoughts?
Thank you very much. It's welcoming news to that the Bank of Ghana, the Ministry of and the Association of Ghana have and up to how they're going to do with the debt exchange. Looking at what is happening in the market and having agreed that the terms of the previous debt exchange will be varied, where instead of 0 coupon, we now have 5% coupon and then 9% coupon rate over the life of bonds is good. Now having 0. But when you look at the current rates that these bonds are enjoying, 19.2% as compared to 5% and 9%, the investors will have a lot of reduction if they have planned that they are going to get these monies over a period of time. And that will feature into the other companies, savings and loans companies, who have had a lot of fixed deposit invested based on their estimate, have to go back to their and try to do we have.
You seem to have concerns about the coupon rate of 19.2%, which you've highlighted, which you believe is extremely high.
The coupon rate over the at that point in time, who rate and those who are taking part in it is the rate for the at time, especially bond that we've issued on the market, was not up to 5%. And so if the rates are very high, 19.2%, that tells us there is a risk involved in the amount that the bondholders are going to enjoy. And this is what we are paying for now, because it's not sustainable. It is something they look at. If we were looking at of 5%, 9%, for the and looking at the sum of money involved in it, we would have been in a better position now.
Don't you think this could probably be the present circumstances we find ourselves in, for which reason they have to go that tangent?
Yes, that is why and if it's very high, you buy a bond and then the payback on the bond is 3. Some of them you could have recouped your initial investment before the bond. That is very. We are now coming back to do the right thing that also the government can also use it and get on it and pay over the life. If you look at how much government is going for from the World Bank, we're going to borrow, the highest we can pay is about 3%. So if you are from somewhere and at 3% and another one you are borrowing at 19%, it does not really correlate and link up with each other. And so it's good for us that we are trying to work things out now to ensure that we have a good and sustainable debt levels. Of course, this is going to be a worrying situation for the external debt holders, because once there is negotiation in the domestic market, it means that government will have to push the external debt holders to ensure that they also agree on some substantial reduction on their coupon rate, so that we can meet the debt sustainability level. We've always been saying it is a game that all the parties are involved, government and then the holders, including those in the banking, savings and loan center, insurance and the rest. It is time for all the parties to sit down on the negotiation table and agree on the way forward. As if we are all holding onto our chest and throwing our weights around, the system crash, everybody is going to be a loser. And the institutions are going to be the biggest losers at the end of the day. And so we need to take actions to mitigate the harshness of the decisions that will be taken. The individuals will not be at the receiving end.
All right, so one interesting part of the statement issued says that the banks would have to look at their governance structure. What happens if they don't? Any repercussions?
That is a huge question we need to ask. Because if they are going to look at their governance structure, and the governance structure they are supposed to vote, and they pull out of the deal that they are not going to agree to debt exchange, then the government will have to now go and do different sets of negotiations, as we see in the individual bondholders case. And so that aspect of the statement needs to be clarified. And I'm sure the Bankers Association were represented by the MDs, and all of them have agreed on this. And some of these things will be formalities. Otherwise, if we leave out to them, the deal might not be assessed at the end of the period.
Mr. Kawa, I would like you to hold on for me, as we've been joined by Twinibu Akodu-Abuache, who is the Executive Secretary of the Association of Savings and Loans, for his perspective as well on this development story. Mr. Abuache, grateful you could join us on the marketplace. Now, we have seen some developments in the financial sector this year as Ghana pursues an IMF program. First, how is your association positioning itself to stay strong and take advantage of all that is happening in the financial sector?
Okay. Hello and good afternoon to your viewers this afternoon. Happy New Year to everyone. This arrangement is something that the whole nation is involved in. And for that matter, it is not only one institution that has to deal with it. If you take, for instance, the savings and loans companies, we have always been preparing ourselves in terms of governance, in terms of risk management, in terms of liquidity and operational resilience. And so this that is happening in the space, our members continuously engage. And one key thing that is also very important is that you continue to engage with your regulator. So that, for instance, if you take a look at the regulatory reliefs that the central bank has issued out for those in the bond who will take part, it's something that we've always had this kind of discussions with the regulator. And so as for the savings and loans companies, we will continue to collaborate with the regulator and also with government policies to make sure that we continue to deliver on our mandate to serving the customer. The ultimate beneficiary of everything we do is the customer. And so if we are able to give loans to the customer, we are able to also give their deposits to them when they come to us. That is the key thing that we have been focusing on all this while.
All right, so do you think that due to the domestic debt exchange program that has been reached with banks, it will have an impact on your operation since you also receive funding from the banks?
Okay, so let me put it this way, that savings and loans companies, they do not have direct funding from anybody, neither the central bank or the commercial banks. Of course, just like an individual will go to a commercial bank to borrow to do his business, the same way savings and loans companies also, if they need extra money, they also go to their banks to borrow. And so if the banks are able to have excess liquidity or enough liquidity in their operation, then when a savings and loans need more money in this operation and they go to them, they'll be able to get those funds. Another key thing is that I remember when this started, I spoke here and said that we should all exercise some restraint. There's no need for us to panic. And for that matter, your financial sector is a key place that if you want to build your economy, you go to. And therefore, it is a collective effort. And so when your financial sector has a challenge, every facet of your economy will be challenged. And therefore, for us, we believe in helping build the financial space, in helping contribute our quota to serving the populace and to making sure that the financial sector is resilient and strong.
Mr. Kodu Abuachi, were your members consulted on this debt exchange program?
I must say that you know that it is those who have the primary dealership or those who have direct dealings with the Central Depository Security. So our members were contacted through their banks because they bought this instrument through their primary dealers, i.e. the brokers and also the commercial banks. And since then, there has been consistent engagement between our institutions and their corresponding banks and their brokers to making sure that the best comes out of it. And we have seen an improvement. One thing that I'm happy about has to do with the fact that 2023, the institutions are going to receive something, even though we had wished that it was more than this. And also the issue of the various clauses that there's been an amendment to in the memorandum. We must say that going forward, what we need to focus on as a nation is to work towards getting a lower inflation rate, work towards bringing our interest rates down, because if Treasury bill interest rate is still high up there, then the net effect wouldn't be positive. And so we believe that going forward as a nation, let's work together to bring in our interest rate down, i.e. Treasury bill, government has a role to play, and also continuous engagement, which is the way forward.
Now, following the debt exchange program, investor confidence has dropped. And you indicated last year that confidence is coming back after the cleanup exercise. What has been the development so far?
So this is your assertion. And yes, you realize that some people were a bit skeptical about the whole financial sector. Obviously, because maybe some might have not understood a lot of things and there were a lot of uncertainties. However, I must say that our members are continuously working and they are able to serve their customers. And this is something that we think that we should continue to build on. And you realize that there are even more savings and loans that are going to come into the space this year. And we are expecting that we will continue to reach out to more customers, those who need short-term loans to do their businesses, to build their lives. Coming to a savings and loans company is obviously the way to go. And for us, if you look at our turnover time in granting loans, take savings and loans and finance houses, we're able to serve the public within that shortest possible time. And they are our key focus, which we believe that going into 2023, as we have started, we will keep the momentum.
Have you had new members after the cleanup exercise?
Yes, we've had one at least. Okay. One has joined, and we know that there's another one that is also on the way coming.
All right. Grateful, Chinibu Akudia Boache, speaking to us on the marketplace here.